So cost of constructing the building and cost of purchasing the building. So there are two different stuff. If you are constructing the building, so engineering fees, the map fees, architectural fees, building permits, contractor charges, raw material, overhead, labor charges, and also if you borrowed the money for the construction, so that interest that you pay on the loan, that is also the part of building costs. So that is very important. If you don't have the cash, you are taking loan, so you must add that interest to the cost of the building in construction. But if you are already constructed, if you're purchasing already constructed building, then purchase price, agency fees, right? Any taxes that you paid, sale tax, legal tax, transfer tax, what kind of, every kind of tax included, plus any renovation charges for first time use. First time you renovate the building, you have a floor map, you whitewash the building, this kind of stuff. That expenditure is added to the cost first time. If you are using those building and after that you remove the carpet and change the carpet, so that is the expense, not the cost of the purchasing of the building. You whitewash already used building that is in your use, so that is the expense on the building. But first time, like like installment, you are installing the AC for first time use, that installment charges is the cost of the AC. Similarly, the cost of the building to make it useful for the first time, the renovation charges, that is the cost price of the building, right? Now equipment cost, any kind of discount, freight charges, insurance, commission, installation cost, expenditure to test the asset before it's placed in service. Any kind of payments that you pay before the first time running of the equipment. We call this cost of equipment. Right? You are hiring IT services professional to check my laptop. For the first time that I bought it, I need to pay him. Okay, you are installing Windows for the first time in this computer. That cost is also, installation cost is also added to the cost of this laptop, right? And cost of any special platform. If you are reserving some space over there and you need to pay for that, for example, you are purchasing an LED, big LED board, and you are placing on a billboard over there for which you have to purchase for 5 years. So that cost is also included in the cost of that monitor, LED. Okay? So similarly, anything that you pay before the first time usage of that item is the cost of that item, whether it's a land, whether it's a building, anything. Insurance, freight charges, transportation charges, sale taxes, installation, commission, agency fees, any discount you get, but discount must be less. Okay, I know you. I hope you understand, because whenever you receive the discount, your cost price decreases, right? So that is just a small point. Now land improvements. So land improvements, these are driveways. You build some car parkings, right? You make a shed for the car parking, artificial roof, this kind of stuff, sign, fences, sprinkle system. You install watering sprinkle system so that the water can be distributed to the, or can be sprinkled to the grass or to the plants automatically. So all these are called land improvement, and they depreciate. So similarly, anything that you install for the first time that you install, all the costs are cost of the land improvement. Whether you pay freight charges, insurance charges, whatsoever before the first time usage. We call this cost of land improvement. But there are some lease improvements as well. Sometimes you don't buy, you rent out. Rent out car parking services. So it means, so since lease improvements basically depends on the term. So we'll see over there, if we are using the equipment for more than of its 75% of life, then we treat that as our asset. If we are using them for less than 75% of its life, we say that no, this is just like a rent, right? For example, you rented this building for 50 years and the life of this building is 60 years, right? But if you show to the balance sheet, the building, your balance sheet increases. So the law states that you are using this building whose life is 60 years, you are using this building for 50 years. So essentially this building belongs to you. So you treat this as a ownership. Plus, there are some certain agreements over there. For example, after the expiry of the period, you have the right to purchase this building. After 50 years, if the terms and conditions are that, after 50 years, I can purchase this building. So this business can purchase this building. So it means this is some kind of arrangement that this building is yours and you are paying this, you are just, you know, paying back the loan, this kind of stuff, right? So there are some different, you know, taxation problems as that if you are using your own building to show to the government that this is like a rent, so rent is less from the profit, right? So your profit gonna be smaller, your tax gonna be smaller. So some businesses do these kind of strategies. So we call this tax avoidance. Tax avoidance is a legal term. You can do that. It's legal. But tax evasion, like you purposely hide the taxation, it's a crime and you will be punished, right? So the law states that if you own this building for more than its 75% of the life or 2/3 of the life, it means you are the owner. So do not deduct the rent. Just put it down on your balance sheet that this building is yours so that the government receive more taxes. So that's just for the law. So lump sum purchase of the asset, here we go. What if we purchase the asset, combine asset? For example, we purchase a building and land all together and we pay single value. And now how would we know that how much is the cost of the land and how much is the cost of the building? For this purpose, we use relative sale value method, or we call this RSV method. So we have an illustration here. So let's talk about this. Suppose FedEx purchases land and building in Denver. The building sits on 2 acres of the land. The combined purchase price of the building is 2,800,000. The appraisal indicates that the land value is 300,000 and the building value is 2,700,000. So you hired a person and you ask them to have a survey and find out if we alone buy the building, it costs us 300,000. And if you alone buy the land without building, the land costs us $2,700,000. So if we do not make a combined purchase, we have to pay $3 million. But since it's a combined, so we got some discount, we are paying it $2.8 million. So relative sales value method says that make an average, weighted average stuff. So how we are going to do that? Simple. So if we purchase them separately, we will be paying them $3 million, right? So 300,000 is how much percentage of 3 million? 10%, right? And 2.7 million is What percentage of 3 million is 90%? Similarly, so you paid 2.8 million. So in 2.8 million, 10% belongs to the cost of land and 90% belongs to cost of building. So we call this RSV method. It's just the name is fancy, the basic mathematics is the same. So you guys understand? Ella, Nam, Harry, Anthony, Hyunjun Kim,
Yeah.
Marilyn.
Yes.
Good. Regarding this method as well, it's pretty simple, right? Understand? Okay, let's move forward. Now, what happened? You need to make the entry. So you paid $2.8 million. Your cash decreases by $2.8 million. Right? So what is the entry? Your asset increase, your cash decrease. So what asset increase? Land with 280,000. Building increased by $2.52 million and cash decreased by $2.8 million. So entry would be simple. Land, building to cash. Our debit side is equal to credit side. Right? So the appraisal value is used just to find out, this value is used just to find out these percentages. Right? The question says, you paid 2.8 million. So some students they confuse, it should be 3 million. No. From your pocket, how much is going out? How much is the cash outflow? $2.8 million. Not $3 million. $3 million is the appraisal value, is the survey value, or is the value in isolation, right? Now, you answer this question. So I'm going to be creating a breakout room activity. Answer this question. So take a picture. And I'm making 2 breakout rooms. Take a picture and try to solve it. You have maximum 10 minutes. So for those who are watching online, I'm going to pause the video here and we will be coming back after the breakout room activity. Okay, class, welcome back from the breakout room activity. So let's compare our answer, but first, let me read the question for those who are watching online. So here, how would FedEx divide a $120,000 lump sum purchase price of land, building, and equipment? So they have purchased 3 long-term assets with 120,000. So our problem is how much we have to write for land, for building, and equipment. So they have the market values, they have market survey, and they found out that the estimated market values of 40,000, 95,000, 15,000 respect. Whenever there is a word respectively, it means you need to read in the order. Land is first, so land is for 40,000. Building second, so second is for building. Third for equipment, third for this 15,000 for third one. So if you add